You can only pay for things that a credit card will receive. This is why in some conversations we'll say cash is king, and the next conversation we'll say credit is king. But cash is king because you can pay for anything in the world with cash. You can pay for anything in the world with cash. But on the credit card side, you can't pay for everything directly with a credit card. You cannot pay your life insurance with a credit card. The first component that we want to talk about is your credit mix. When you think credit mix, or when you hear the word credit mix, I want you to hear diversity. When lending institutions and banks are looking at your profile, they not only want to see that you can manage a car note, they not only want to see that you can manage a credit card, but they want to see, can you manage a house? They want to see, can you manage a personal line of credit? This right here gives them confidence to lend money to you. So you want to have it built out on all angles. And so with that being said, I have listed here on our chart components that you should be aware of and that you should have embedded inside of your credit report. And the first one that we have here is a home. It's a home. And the benefit that I love about having a home on your profile is that oftentimes it will indeed be the largest loan limit or amount that you have or the individual has on their profile. If you live anywhere in America, you'll have somewhere between $150,000 loan all the way up to $10 million listed on your profile. This gives the bankers insight to how the depth is on your credit profile. All right, it's not just you having a $100 credit card. It's not just you having a $500 credit card, but you have a home loan. The home loan underwriting process is one of the most grueling processes that anybody could ever go through when it comes to underwriting. They want to know everything about everything regarding your debt and your income and your past, especially on the business funding side. See that you have a home loan. That right there is a home run for them to give you an approval, because they can trust that you know how to manage large loan limits. The next one we have here is your auto loan. Now, the thing I love about auto loans is that it is not difficult for you to have a couple of them in a lifetime. In fact, it's said that on average, humans will have anywhere between 3 to 5 cars financed in a lifetime. This is something else that not only adds on to your diversification, but it also adds on to your longevity. They're looking at how can this person manage their home? How can this person manage a plethora of car loans at a time? One of our clients who had a 750, he has a 750 credit score. He has 2 booming businesses. Both of his businesses are doing 6 figures. He's in the training business. He's also in the meal prep business. And his businesses are going great. Income is jumping out of the roof. But he's trying to figure out, why is my credit stuck at a 750? And the reason why his credit had not gone beyond a 750 is because he did not ever own a home, nor did he ever finance a vehicle. Now, am I suggesting that you should just go out and buy a home or buy a car just so that your credit score can hit an 800? No, but I'm giving you guys this for educational purposes, so that you can see that beyond, or that you're not walking around your house scratching your head trying to figure out, why in the world is my credit not where I want it to be? It's not there because you have not built out your credit mix. And so the next one we have here is a credit card. Now, as you can see, a credit card is one of the easiest approvals known to man. The reason why it is so easy is because you can get a limit as small as $50. You can get a limit as high as $75. Oftentimes, banks make majority of their money. They make a lot of money, as I should say, off of credit card interest. To give somebody a $200 credit card, or to give somebody a secure credit card, or even to give somebody a $5,000 credit card, when you have all these bank deposits, is not a huge burden to the bank. However, it is something that you want to ensure that you have on your profile, especially if you're going out and trying to acquire business credit cards. Bankers and banking institutions operate off of comparables. They want to see, what do you already have? This is why it's great danger in entrepreneurs trying to go out and get $25,000 and $50,000 business credit cards where they only have $500 limits on the personal side. Again, you want to make sure that your personal is strong, and then you level up to the business side. So again, this is a component that you guys want to have embedded in. That is your personal credit card. Ideally, in the perfect world, I would suggest that everybody has at bare minimum at least 3 to 5 personal credit cards. We say 3 to 5 trade lines as a whole, but 3 to 5 personal credit cards if you're trying to go in for funding to make your profile as strong as possible. The next one we have here is a PLOC. This is a personal line of credit. As you can see here, it strengthens your profile But this is a level above your actual credit card. It's a level above. Why? Why is it a level above that? Because a personal line of credit gives you access to actual cash. Unlike a credit card, you can only pay for things that a credit card will receive. This is why in some conversations we'll say cash is king, and the next conversation we'll say credit is king. But cash is king because you can pay for anything in the world with cash. You can pay for anything in the world with cash. But on the credit card side, you can't pay for everything directly with a credit card. You cannot pay your life insurance with a credit card. You cannot pay your mortgage with a credit card. You cannot pay your car note directly with a credit card. And so with this being said, this is why this is a level above a credit card, because when you go with a personal line of credit, they give you access to actual cash right now. If you got a $25,000 line of credit with a bank, you can go to that bank right now and withdraw $25,000 right now. The next one we have here is a personal loan, similar to a line of credit. The main difference between the two is that a personal loan is going to have you on scheduled payments as soon as you accept that loan. Well, on the other end, a personal line of credit, you only pay on what you use. But in this one, I love this because it also, just like the line of credit, shows that you can manage cash, right? So you guys see the diversity along the way. You got your house, you got your car, you got your credit card, you got your personal line of credit, and then you also have a personal loan. That credit mix needs to be strong. It needs to be mature before you go in and try to go get and obtain the most optimal funding and credit. Now, I want you guys to know that on this channel, all within posterity, all of what you'll hear Jerron Anthony Tyler talking about is the plethora of ways that you could penetrate funding. So right now, this particular chart or this particular message is pushing towards you having the absolute most pristine credit profile. But there are other directions that you can go in if you do not have that. But again, this is for those that are aiming to have the most pristine opportunities at getting the best funding out there.